All sure Justin reports on
Okay,
the Boeing
good.
that they're doing.
Thank you. Because I was wondering about that.
So we're recording right now.
Yes.
Now, the meeting won't start for about 40 seconds. Meeting starts. It is, are we recording?
Yes.
Okay, it is 2:30, so the meeting of the Finance Committee will start. We are, both members of the committee are here.
Yes.
We are now open for any public comments. Are there any public members?
No.
No public, okay. So we'll move on to the next item, which is approval of the minutes of the last meeting. Any issues with that, with the minutes? I didn't see any issues with it. So we'll have the meeting.
No, that's fine.
Okay, they're approved. Financial matters, we'll have the certified audit report from Mr. Zizzi when he arrives. Right now, we'd like to review the draft fiscal 222, 223 budget, which we have.
Right, yes, okay.
We'll turn that over to Teresa, you or Jim.
You want to speak first?
This is one housekeeping item. How this process works for the agenda tomorrow night, the
Right.
third agenda. We titled it the item workshop.
Okay,
So you're seeing this budget for the first time.
right,
So we're reviewing with you, the finance committee today, the
right.
budget. You feel free to make changes,
Okay.
suggestions, tell us we're buying too many paper clips, you know, whatever.
Okay.
We will adjust this
All right.
document accordingly.
Okay,
Then tomorrow night, we're gonna give the document, actually, I think we're gonna send it out, right, by email tomorrow morning or tonight, after you looked at it.
Mhm.
Then, we're gonna treat that item as a workshop where Teresa will go through line by line
right,
and explain all of
Help
it.
you?
okay,
What's
Yeah,
in it.
Mike sent me.
They don't have to vote.
right, right, not tomorrow.
They'll have a 30 days
Right.
to think about it, to get
Okay.
more information if they wish. But that's kind of the process.
What, I already got, I already
Let
got
me
the
suggest
file.
that we can look at it today,
This particular unit, there's a lot.
and that
Here.
at the next finance meeting, if there are, after you get home and look at it more
Right.
carefully, if you have any recommendations or changes that we want to make, we
Okay.
can bring it back to the next
Okay.
finance committee.
Where are you looking right now?
There he is. Hi, how you doing?
Greetings and salutations.
Hello, Mike.
Hi.
How are you?
Hello. Nice to see you.
Nice to see
Good to
you.
see you.
Good to see you.
And have you met Paula?
No, we have not met.
This is Mike Zizzi.
Hi,
Auditor.
nice to meet you.
Pleasure is mine.
Oh, I see it, I'm sorry, Robert. I was looking at it.
It's okay, well, we'll interrupt what we're doing and give Mike a chance to get his act together.
Jessica's gonna put up your presentation
And
now.
we know you have a presentation, so we thank you very much. I have to tell you that I received this yesterday in my board packet, so I haven't gone through it as carefully as I would have liked. But we'll allow you to make a presentation, and if we have any questions, we'll go ahead and ask you those questions.
And I didn't bring my phone in with me, but I'm thinking that mostly my schedule's pretty wide open tomorrow. So if by chance you have
Okay,
questions in the morning,
okay,
my afternoon's a little tight, but the morning's
okay,
pretty good. So if there's something that comes up after we go through it today,
okay.
do I have a clicker or am I just doing a head nod?
Just do a head nod.
She's good. She'll get it.
And you can look there, and we can look
All
there,
right.
or there. Well, that's not mine.
Is that one not working, Jess?
Oh, I can.
Turn them on.
It would be easy. If it's not, is it a lot of trouble, Jess? Okay. It'd be easy for Mike to look at that one, I think.
Both to the side of me, so but doesn't matter, but it certainly helps you.
Yeah. Oh, yeah. Speaking of forgetting about Jim.
Yeah.
Jeez.
Mike, what's your position at the called? You have like, are you like, I mean, I don't know, maybe Maybe there are no positions, or
No, yeah,
what is your title?
CPA firms have all kinds of required positions, and I'm a partner with the CPA.
That's what I want to know, whether you're firing or not. Very good. Excellent. Because I have to introduce you, so I'd like to introduce you to Sage.
Yeah, so tomorrow night he'll be doing your introduction, just that's what we're talking
Okay.
about.
If you have anything more lengthy you would like me to do, just
Well,
send it to me.
I prefer to go by your excellency. Nobody seems to have gone along with that. So, okay, so without further ado, I'm going to run through, as I typically do, I'm going to run through the independent auditor's report, which is on pages 1 and 2 of the financial statement, if you're trying to follow along.
Right.
Otherwise, you can just follow the slides that I put together, and that will kind of be a hit of the highlights. I also highly emphasize page 11, want to slide a piece of paper.
Right.
Because when I get done with the independent auditor's report, I'm going to go there. I just to give you a little background on the reason that I do that, and I think it's particularly this organization, is because if we look at your income statement, statement of activity, whatever we want.
Right.
But yours can swing dramatically based upon what kind of work we did that year. If we did a bunch of repair work, it's gonna show up in the income statement.
Sure.
We're gonna have a very small income, possibly even a loss. If we did a lot of road reconstruction where it gets capitalized, then that winds up on the balance sheet and it looks like we've made a boatload of money. I think it's fairly misleading. We typically budget to come pretty close to break even, and that's usually where we're targeting. And so, you know, our success at that really, I think, is better reflected in the cash flow statement. Now, that may be impacted by a few timing items. Did we collect, you know, the revenues that we had coming? Again, the benefit fees tend to come in fairly regularly, so not a big swing there. But if, you know, if we've got, you know, I guess, cost intense project ordering, or if we've got emergency repair work, we may be waiting until we get paid to pay a vendor, where we may have a big swing in either our receivables or our payables.
Right.
Then that can impact our cash. But, anyone? And
Well,
so,
if you go through it, you see that here.
right, that's right.
That's right.
And also, I think that certainly for the public, you know, when I first got into this business, I used to go through my balance sheets and my income statements, and I'd be talking about accrued this and deferred that. And pretty soon people's eyes were glossing over and they had no idea what I was talking about.
Right.
But when I talk about, we received this much cash, we spent this much cash,
They all
this
know.
is the reaction I'm looking for. I'm
That's
looking
right.
for the people
Yes,
in the audience
yes.
to be going like this. That's exactly what I'm targeting, and that's why I started doing this. It's much more of a challenge for me when I have to go to a governmental fund type of fire district or something like that, where they don't present a cash flow statement because they don't get that same benefit.
Right.
But anyway, that's kind of just a little bit of a background.
Okay.
Great. So on page 1, in our first slide here, the first paragraph of this report indicates exactly what was audited. The audited statement of net position, the statement of revenues, expenses, and changes in net position, the now famous statement of cash flows, and of course, the notes to the financial statements. The second paragraph indicates that management is responsible, again, management is responsible for the preparation and fair presentation of the financial statements. That includes the design, implementation, and maintenance of internal controls. The third paragraph starts out by telling you what my responsibility as the auditor, and that is to express an opinion on the financial statements based on the audit. That same paragraph also tells you the auditing standards that we follow. We follow auditing standards that are generally accepted in the United States and the state controller's minimum audit requirements. Those standards require that we plan it, and I always say this when remembering this in your sleep. Plan and perform the audit to be reasonable assurance, not absolute assurance, but reasonable assurance that the financial statements are free from. And another word I don't stress enough in here is free from material misstatement.
Right.
So we're not saying that these financial statements are perfect, but we're saying that they're not materially misstated. And again, that reasonable assurance, that's still a high level of assurance. It's just not absolutely, it took you a year to transact all of the transactions that you did. The fourth paragraph defines what an audit is, or at least attempts to, which is the performance of procedures to obtain the evidence we need. The procedures selected depend on auditor judgment, so our judgment, which includes the assessment of the risk of material misstatement due to error or fraud. So again, we do a risk assessment of each and every organization that we go into, and we design our procedures so that they are appropriate in the circumstances, which is what I tell you in the next slide here. So we consider the district's internal control and design procedures that are appropriate in the circumstances. We also evaluate accounting policies used and the reasonableness, and there's that word reasonableness, of any material estimates they make. The fifth paragraph is what I call the up paragraph. So we say affirmatively that yes, we have obtained sufficient evidence on which to base our opinion. And this is the last time I'm going to tell you this, that we turn to the second page before we tell you what you really wanted to hear, which is that the financial statements are fairly presented and that they are in conformity with generally accepted accounting principles. The reason I say that is that the powers that be have finally listened to me and they have reformatted these opinion reports. And so next year, the auditor's opinion is the first paragraph on page 1, not the first paragraph on page 2. I've been saying this for 20 years, they finally listened to me. The seventh paragraph refers the reader to supplementary information that is required by GAAP. And there's a couple of things in here that are required. That's management's discussion and analysis, which comes before the financial statements, after the auditor's opinion, but before the financial statements. And if you do nothing else, I hope that you read that. A lot of what comes out of, my slides from the next couple of slides really comes out of there, because it's kind of, I hate to hit the highlights.
Right.
kind of thing. And so I try to convey, as I like to say in English, kind of what went on during the year. So that includes additional required supplementary information is on your pension plan, the plan's proportionate share of net pension liability, and the schedules of contributions to the pension plan. And new this year, because we added OPEB benefits, are the scheduled changes in the district's net OPEB liability and related ratios, and the schedule of contributions to the OPEB plan. Now, you may be saying to yourself, well, wait a minute, we really started that the year before. Well, that's because in both your pension and your OPEB reporting, it takes them so long to compile the information that you need that they reported a year behind. So that's why that's new this year. While the MD&A contains information that is derived from the financial statements, it also contains details and analysis that are not found in the financial statements. So again, they're not required to follow government auditing standards, nor did we report on internal control and compliance under the single audit this year, as the district did not earn in excess of $750,000 in federal financial assistance. So if you took this year's report and tried to compare it to last year's report, there's additional reporting there because we did have those requirements in the prior year. The single audit requirements, oddly enough, are driven by qualifying expenditures and not the cash receipts, because we as auditors, that's what we're going to audit, is we're going to audit expenditures. Did they qualify? That was a year ago. So now I'm going to turn to page 11. And I kind of run through it. Okay. So I started at the bottom, and the reason that I do that is because by starting at the bottom, I can anchor you back to taking the financial position, which is where the cash actually appears. Okay. And so, our cash and cash equivalents.
I'm sorry, I just wanted to let you know, Shauna Jengo is now joining us, just to let you know.
Okay.
Thank you.
Via Zoom. Go ahead.
Okay. So at the bottom of page 11, we have cash and cash equivalents and restricted cash and cash equivalents that total just a little bit more than $6.5 million. And so if you move just up from there, you'll see that same number. So the first two numbers are that's kind of the reconciliation to get you back to the statement of financial position, or as people that are actually interested would tell you the balance sheet. Right. That's kind of the layman's definition of that. So we ended the year with 6.5 million. We started the year with 6.3 million. Again, going bottom to top. That probably should be on my next slide. That was the supplementary information. I forgot to give you a thumbs up. There we go. Okay. So, cash and cash equivalents increased 179,990 as compared to a decrease in the prior year of 592,000. So that's about a $770,000 difference year over year, which is roughly the reverse of what happened in the prior year. And again, this is where I was saying that, a lot of times we're impacted by FEMA. And so the difference results in our operating expenses decreased by $1 million from the prior year as a result of all the disaster relief repairs that we did. We also earned less in interest income as a result of the rates paid by LAIF. And that's predominantly where our interest, any interest we have that earns cash, is typically going to go. And so my next slide gave you a breakdown. You can see that this is where our interest income is actually earned. And again, it's LAIF and others. Others aren't what's mentioned. While we did have slightly less cash held at LAIF throughout the year as a result of expenditures over the last 2 years, the decrease in rates being paid impacted the return as well. We had again, moving bottom to top, the next line item is the refund. This is a net of deposits. So this is actually money coming in. So we continue to hold, here we go, I'm going to give you a detail of what deposits we hold.
Permit and utility.
Yeah, so we hold a large deposit related to Via Santa Rosa. Been holding that for as long as I can. In addition to the permanent utility deposits, our utility deposits increased by $4,000 this year, and our permanent deposits increased by $1,600 this year. That together is the $5,600. Those kind of fluctuate back and forth. Some years it's a positive, some years it's a negative, but it's typically not a lot. The next two line items is the servicing of our capital lease or long-term debt, if you want. So the district makes semi-annual payments as part of its building purchase, the building that we're sitting in. Each year, the allocation of principal goes up and the allocation of interest goes down, as you think on any normal mortgage that you're paying on. This year, the breakdown was 42,021 to principal and 11,932 to interest, and we have 4 years left on the capital lease. Acquisition of capital assets, we spent $27,000 on capital assets, and virtually all of that related to improvements to this road.
Right.
A lot of what you're looking at. And I will tell you that it's a wonderful enhancement in today's environment. Anytime I go anywhere where they haven't upgraded these kinds of things, you wind up with, again, you're trying to hold a meeting with some people here, some people not here. Those meetings work really well if you're all here or if you're all on Zoom. Right. If you're doing some kind of hybrid, it becomes really
Getting the sound right.
That was difficult.
Yeah, it's very hard. Yeah, and particularly if you have, somebody for an audience, something of that nature. So I commend you for that. The last item in that section is the proceeds from disaster revenue. So we received a total of $406,232 in disaster assistance. Again, that's the money coming in. We recognize most of that revenue in the previous year. The amount that came in cash is fairly consistent with the amount we received in the previous year. In addition, we recognize $550,000 in bad debt expense as Callaway has denied our cost overruns. The next section I take as a whole, and it really gets kind of dissected two different ways. So if you look at the top section of page 11, you can see that we break it down by cash received from customers, cash payments to suppliers. And
Just take this thing. What's confusing there is that he throws in numbers that are not on the page.
That's right, I noticed.
And so that makes it a little bit confusing.
Are they on this slide though?
Yes, they're on the slide.
Yes.
And that's it. So if you're looking at the page,
You're
you
absolutely right.
get confused. That's right.
You're absolutely right, because those appear on page 10.
That's
So
correct.
they're part of the
They're part of the
income statement.
report,
Right.
but not necessarily on this
Not on
page.
this
That's exactly
right.
Right.
Yeah, I see it.
Okay, so we break it down here by the cash that came in from customers, cash paid to suppliers, cash paid to employers, employees, sorry. And then on page 12, we take that same amount of money, you go to the bottom of that section, that's the same 198,000, and we reconcile from our operating loss to the amount of cash that was used from operations. So this is where we talk about when I used to make people's eyes gloss over, we talk
Yes.
about various fluctuations. benefits fee, benefit fees receivable, accounts payable, accrued payroll, those kinds of things. Those are principally timing differences. And a big piece of this, and becoming more so, is when you get down into the section that talks about deferred outflows and deferred inflows. Those all relate to accounting entries that are related to both our pension and our OPEB. We don't really have any control over that.
No.
It goes to the actuaries, they do whatever it is that they do. And then they come back with here's your new numbers, and then we just adjust to those. But oftentimes it has fairly significant swings that impact, again, your net income. That's completely out of our control, and a lot of times it even has to do with the assumptions that they're using. If they make a change in the discount rate from 7.5% to 7%, that's a big swing for us. And all it is that they change their mind. So again, just understanding that that's not something that's really manageable.
No, it's not.
So cash flows from operations, again, cash used in operations, that whole section was $198,888. That was $907,000 less than the prior year. Again, which is not surprising given the level of disaster expenses that were incurred in 2020. In the current year, we recognized $115,071 in disaster expenses. It's noteworthy that our cash received from customers increased $73,000 and our payments to employees decreased $39,000. Other items contributing to the operating loss are the accounting entries required by both pension and the OPEB accounting. If you kept up with that, you did a heck of a job, because I completely forgot to. Over here. So as far as the financial statements go, that was what I had prepared for you today. I'd be happy to answer any questions.
Now, usually, I haven't seen it, I didn't see it here, and maybe there's a lot of pages there, I may have missed it. There's usually a report related to management.
I do have a management letter as a separate letter. Again, last year, if it was included in the package.
Wasn't.
There would have been there's a letter under the single audit that deals with internal control and compliance. The two things that we mentioned in this management letter this year deal with revenue and expense recognition and control involving the cash cycle. In examining the various equity accounts, this is what we've been talking about for years.
Mhm.
In examining the various equity accounts, we noted that entries are recorded directly to equity instead of the proper revenue and expense accounts. In order to accurately reflect financial information, we recommend that receipts and disbursements be recorded to the respective revenue and expense accounts only and subsequently added to equity through the year-end closing of the books. Only reclass entries, and this is where you guys aren't really.
So before you go on.
Sure.
So give us a layperson's example of what you're talking about.
Okay.
Can I give one from
Sure.
my
Absolutely.
perspective, why I do
Right.
this? Okay, you guys every month, you want to know what's in roadway rehabilitation. You want to know by zone, what is in that
Right.
fund.
Right.
Right.
If I didn't do this, they would not be able to have that unless I did all the calculations from the income and expense. So for me to update that fund balance that they need so often because of engineering and everything going on, that's why I make these.
Understood. And so, and what those are, and if I can
So
finish
before
this,
you do that, and that's very time consuming, right?
absolutely.
I mean, I think that's another issue that at some point we had talked about. I bring this up because I know it's very time consuming. And if we could modify that in some way, that would save you a lot of time, wouldn't it? Okay, go ahead.
So when I close on that particular topic, I said, only reclass entries between service areas, zones, should be made to the equity accounts and should always net to zero, so that equity in total always ties to the prior year. And so that's the piece that's not happening, is that, again, if we're, if we need to move money from one fund to another, again, typically it's a journal entry, and again, she's got to balance the funds. So she's moving the cash, she's got to move the equity. That makes perfect sense. But if we move the cash and the equity in one fund and the cash and the equity in the other fund, they should offset. And so as we look at the statement of financial position, and we get to our total net position of 14,891,000 on page 9. Not that the number itself is.
Yeah.
Right.
But that is for now the magic number. And the reason for that is that the way an accounting system works is that if you have a trial balance, not a financial statement that you created from your software, but an actual trial balance. Because to get to that balance sheet, and I'm getting a little accounting wonky here, it's not difficult, but again, if you're not an accountant, it may be hard to conceptualize, I don't know. But when you close the books, net income in total closes to retained earnings and changes your equity. So what that means is that because that's a product of closing net income, all year long, when we run that trial balance, if our total net position is 14,891, at any point in time, I don't care if it's Thursday, the 27th of May, or if it's July 1st, all those equity accounts should always equal 14,891, 898. And if they don't, something's wrong. And so what happens is that somewhere along the way in all these entries, they don't always balance. And so I don't know, because again, I'm not here, so I don't know if it's that we're not making the entry right, or if we are making other entries. I can't speak to. But I know that every year when we come in and do the audit, the very first thing we have to do is get equity to reconcile.
Right.
And it literally is a spreadsheet that's this long because, as you indicated, you have so many equity accounts. You've made this very, very difficult.
Right.
And in Teresa's defense, every time that we have, FEMA, I mean, she's got, what she does day to day is a full-time job.
Sure is.
And then every time we have FEMA, we throw that on top. And then you've got this charming auditor that comes out and he piles on top of that. And she's buried. I mean, and Jim knows, every time we have FEMA, it's like, Teresa, when can we start the audit? Teresa, when can we start the audit? And finally, Jim calls me, leave her alone. She's trying to get FEMA done. Because you want to get those reports in, you want to get that money back. That makes everything else that we do take a back seat. And so
our road operations are 2 million, basically. That's what we charge benefit fees. Well, the last FEMA was 3.2. So it's a doubling
Right.
Sure is.
of activity
Right.
and no increase in the finance department,
yeah,
personnel wise.
No.
I guess the next FEMA, we need to look at the whole thing, but just as a real simple thing, is the minute that FEMA hits, we have to put job opening based on how much FEMA we're gonna go for. And I remember meeting with the board saying, I'm gonna exploit the hell out of this and get as much as we can get.
Right.
If we're gonna do it, let's go for it. And it came out 3.2 mil. But we didn't have the staffing to do that. That would have been like telling my road department, okay, the two of you guys, go do this 3.2, in addition to everything else you got to do. So I guess we didn't think about that.
Yeah, that was-
Yeah, so something had to give, and unfortunately,
I don't put it in here because I don't want to tell you what to do. But, and you didn't ask me, but I'm going to tell you anyways, that I would strongly suggest that the next time you do this, that you bring in a consultant to just handle the FEMA for you. I mean, years
They're hard to find because I've been kind of looking around. Well, the one that causes us all the trouble, Bridget or whatever. But if they're available, they go to the bigger agencies. So we're gonna be the last of the heap to even get any of those people, because they're gonna go to the guy who's got a $12 million FEMA contract, you know? So anyway, it's a tricky.
Understood, but I wanted to share with you the impact that it has. And I didn't want this to come out as being unduly, pointing fingers, because it just isn't fair.
No.
And so.
And as far as the equity entries, maybe to make your job easier, I need to have maybe a longer conversation with someone to help you. If I'm doing something that's making it so hard for you folks and I'm not doing it correctly,
Well, I think the key, like I said, is that at the end of each month, as you're preparing
Just
for
bring your trial
for this
balance.
meeting or for your board meeting or whatever you do your monthly reporting, run your trial balance. And if the equity doesn't tie,
something's off.
something's off, but if you know it tied last month and it doesn't tie this month, you know
And
there's
I
a couple of
know-
transactions and you know where it is and you can find it, because we have to go through, and it's really a 3-part process. Because so it triples our work.
Especially with our chart of accounts and all of that.
Yes, but we have to figure out what you did. We have to figure out what you should have done. And then we have to explain to you why what you should have done is what you should have done. So it triples the
And
workload.
I know what affected it too is a couple of the entries throughout the year, I put into prior year. And it's,
Yeah, you can't do that either.
No, I know,
Yeah.
I found that out and fixed it, but yeah.
Dates are important.
Oh,
And
yeah.
I don't know if your system has, but certain systems that once you close the year, it'll lock it and it won't let you post.
I think this
So that's
has the
prior year.
capability, but I don't have it turned on right
Yeah,
now.
I would take advantage of that so that,
And it won't let you have it.
it's just too easy, and particularly, when the year changes. I don't know about you, but it's usually Valentine's Day before I start getting the year right.
Yeah, yeah, no, I know.
But the other point here is that this becomes an argument in favor of modifying our system to streamline it. And I think that is very important. Instead of having these zones, which add to the complexity of our financing, et cetera, it really creates a big problem for us financially and keeping records, et cetera.
It does, however, I remember a few years ago, that was up for a topic of conversation about, instead of having the different zones and different amounts in each zone, and each amount had to be used for that zone. I mean, we're just opening another can of worms. I mean, I agree. I think that's
You
ridiculous.
might as well be 14 different districts.
Yeah,
That's
right.
It's a lot.
Very much
Now,
so.
there may be a way to do this financially, or at least on paper, without necessarily having to make a change that we couldn't make, let's say. And I think we can explore that so that rather than at the end of the year trying to reconcile this, what you do is you ignore it for the year and then reconcile the differences, so to speak. Do you know what I mean? In other words, and not for the auditor, because you don't care.
I don't care. I don't report on your zone.
So
That's right.
we have one amount in that.
So it'd only
instead of
be an
all different.
internal
Right.
document as
Yes.
opposed to a
Yes.
document that gets audited.
And what that would do, how many zones do you have?
Altogether, including primary.
So honestly, that would cut her workload probably by 50%.
That's why we've been taking, Jim and I have been talking about
Because
this.
literally every transaction you do gets split 6 ways.
Yes, it's too
Every
much.
transaction.
It's too much.
I mean, I certainly would have, maybe an overhead pool. I mean, that might be your first step,
Right.
is to have, this much of the benefit fees going to this overhead pool that everybody pays. And then maybe the projects, a specific one for that. That might be your baby step to get you there if you can't get it all in one bite.
Oh, it makes sense.
I don't know that we can do anything about the rate that we're charging on these benefit fees, because those are pretty much locked in place at the 1998 level.
Right.
But as far as the expenditure of those funds and breaking them into, each zone.
Right.
I think that the board can, just eliminate these on the expenditure side. Because the only place that comes in on the income side is how much you're charging each property.
So everybody will still get charged their same amount, whatever their zones is, because they're all
It flows
different.
into one pool instead of seven.
Yeah.
or six.
Yeah,
That would be worth looking into.
I think so. It'd make your life so
Oh,
much,
yeah.
unbelievably.
we're just too small to be trying to
Oh, it's-
account for all of that.
Yeah.
I mean, you're a little street repair district. And this is your trial balance. This isn't a general ledger, this is a trial balance. I mean, that's 14 pages. That's, but
Where the other four?
that's, those were. I'm not, sorry.
Right.
But it's just, it's a lot.
It's a lot.
It's a lot for what you do. I mean, and there are or you sat through enough of these meetings with me to know that there's a lot of accounting pronouncements that I don't like. OPEB and the pension ones are tops on the list, because I often tell people that this is what happens when accountants and supervise too long, that we just dive down into the minutia. And I really think that that's what happened when this district was formed, is that they hired some accountant and to help us set it up, and they just went crazy splitting all this stuff up, and it just, when you look at it over a period of 20 years, and you look at the difference between what gets collected and who benefits it. If an area is not getting their fair share of the benefit, they show up day one of their roads. I mean, it's gonna be the report card. So if the roads are in decent shape, they're getting their fair share. Just doesn't seem to be that hard to prove. But I think that, this, with the OPEB and the pension pronouncements, coming up with what that ultimate liability, great idea. That was wonderful. Then they stayed around too long and started talking about deferred inflows and deferred outflows and all these actuarial things that people don't understand. They're in your financial statement. I've been looking at it for years. I can barely explain it. How are you going to go out and explain it to your constituents? And so it just, to me, knowing your audience, who should be looking at this, it doesn't fit your audience. And I don't know who it does. I was looking at the financial statement of the city of Escondido the other day. And same thing. It's just, some of the numbers are just so ridiculous. Why are we doing this? We're making ourselves crazy. Back to the management, the second comment I had was, I said, and this is where I was really started the conversation. I said, currently due to the size of staff available, there's a lack of separation of duties involving cash receipt and disbursement. During the audit, we noticed that the organization does not always have an adequate review of the bank reconciliations. As a result, the bank balance and the book balance do not always reconcile. We recommend the following. Upon completion of the monthly bank reconciliation, a second skilled individual should be used to review the bank reconciliation and at a minimum, agree the bank balance to the bank statement and the balance per books to the general ledger. You don't have to know anything about accounting, but you gotta know where these two numbers are and these two numbers are. And that you've at least followed up on and you made sure that the bank reconciled. Because once it doesn't reconcile in 1 month and we move on to the next month, good luck.
and this is really the first time they've
Yes.
had this, and I hate to blame this, but again, May through October of that year, we were slammed. And so, yeah, the year-end balance, they didn't jive. So that's my fault, but I'm gonna blame it on FEMA because
Well, and the
it was,
arbitration,
yeah, that's what I mean.
Yeah.
And I mean, we're going after $500,000. That won out. So again, it is what it is.
Yeah, it's a recurring thing.
Yeah.
It's that,
Yeah.
It's always
Last
something.
year. Yeah.
1 year it's this, 1 year it's that.
But FEMA is typically, it's a real burden. And I see this. I mean, you guys are kind of the bread and butter of what we do. Robert, you and I had a brief conversation. I mean, there are, within the trial balance, you know,
Yes, right.
we virtually adjusted every account on the balance sheet. But that's kind of who we are. I mean, our bread and butter and our niche to you guys is the fact that, you know, we go that extra mile. I mean, when, you know, typically, and you'll learn this as you go through the process, but, you know, an auditor will typically come in and go, okay, are you ready to be audited? And you go, yeah. And they would look at, you know, at a minimum, three things. Maybe in a perfect world, we'd say, okay, give me your trial balance and give me a supporting schedule for every balance sheet account that ties to that account. If we did that, when do you think we get started? I mean, again, she's the proverbial one-armed paper hanger.
That's right.
So we don't wait for that. So we come in and we help you reconcile your equity. We come in and we help you reconcile your bank. We come in and we dig through some of the details. We help get to, you know, where we needed to be on the FEMA receivable and the revenues recognized. Whereas, you know, again, a lot of my competitors are gonna come in, they're gonna go, you're not ready, call me when you are. Okay, so, and honestly, that's where the powers that be, there's a lot of conversations about what we call big gap and little gap. Gap being generally accounting principles. You know, my perfect example is Vista Irrigation District. You know, I audit, a lot of the special districts that I audit tend to be water districts, so there's tend to be a lot of them. But there's a great disparity amongst them as to what their accounting staff looks like. You're on the one extreme with one person doing everything. You know, Vista Irrigation has probably 5 accountants in their accounting staff and 3 CPAs, and so they even write their own financial statements. They just, when I did their audit, one thing they had me do because it was too hard was the cash flow statement, oddly enough. But you tend to be kind of all over the place. And so, but Big Gap expects that you're General Motors, that you've got a big team of accountants and that you've done your whole general ledger, you've written your own financial statements, you've written your footnotes, you're very well versed in all of the accounting requirements and the disclosures and those kinds of things. And that's where they want us to be. Everything else is kind of, nope, you know, you've got to do that, you know, and they keep clamoring about independence. Well, I look at that and I think that if you think that me helping you reconcile your equity compared to independence, then you're a fool. You know, we've been doing it for 60 years. That's, you know, again, we think that's just good client service. And so that's why districts like yourselves who tend to try to operate lean tend to gravitate toward firms like mine. So that's my 2-second brochure while I was here. All right.
Okay, any other questions, anything else?
No, I need to really look through this. I'd like to take the time after.
Anything that you're expecting tomorrow night from one of your other members that they might be interested in, something that I didn't cover?
I don't think so. I don't think so.
Any thorns in your side out in the audience that are,
I don't think so.
is this an election year? Usually there's somebody in the
No.
audience that.
No, not right
wants to
now.
take a knee for the-
It's not.
Okay.
Should Mike, I didn't have a lot of time, it may not be the appropriate forum, but just touch upon what we've been talking about.
I was
here for
going to
20
suggest
minutes?
that, yes.
Oh, okay, sorry.
I agree with you. No, I'm glad you brought it up. I think that since this will be a board matter at some point, I think addressing that would be a good idea.
Addressing,
The fact that our accountant has 1 year has books of 2 million and another year 5 million, which is what happened in this case. It was spread over a couple of years, but the personnel of one full-time.
First, I think the reconciliation is the issue, and how long that takes and why it takes that way in terms of
Ah,
breaking everything up. That's what I would suggest.
So, okay, so you want to discuss the by fund and or by zone and.
Yeah.
And that kind of thing, okay, good.
That's right.
Because I have mixed emotions about that, again, just from experience, and that, it's one thing to come to this meeting and, nobody pays attention to what goes on, but no disrespect, but nobody pays attention to what goes on at these meetings, so we can have a much more candid conversation. I'm a little leery of in an open board meeting where the public is here, to give the impression that, we're out of control.
No, I think the way to do that is to say what you said here, which is reconciliation of your accounts is very complicated. And look, there are 10 pages that we have to go through. And that's because you're into zones that add stress on the finance people. And it would be a lot simpler if that were not that way and consolidated. I think that's all we have to say. And that thing leads us into
No, I'm sorry.
a future discussion with the board, saying that, we can get into more detail at that time. And then I think Jim's point is a good one as well.
If you could just touch on those items, to be honest, I've been communicating as we've been going along with the other board members, I kind of just tell them what's going on in finance periodically. So they're aware of, and you and I had a conversation about this a couple of months ago, they're aware of that.
Okay.
So I think if you just touch upon the two items that, you're suggesting you take a look at your zone structure and
Right.
and really
Yes.
take a look at what it's costing, whether it be in time or in money,
Right.
to do this form of accounting. You said it's about
Or in life
50%.
expectancy.
Yeah. And then the other, just,
What do you mean with the other? We're talking about the zone
Zone
structure.
structure.
So,
What
I
else?
mean, that's my question.
well,
You want me to cover
the
leadership
need
effort
for
or not?
additional personnel.
Oh, I think that's the first time you've said that, though. Did you get, or maybe I was,
Yeah, well, yeah.
Well, what you said is every time we get a FEMA, we need to address that labor issue
Right.
separately rather than just,
right.
oh, it belongs to Teresa's office and you just kind of
Oh,
dig
okay.
with
Yeah,
it.
okay.
As you well know, everything is really easy as long as somebody else has to do it.
Yeah.
Well, she makes it look easy. She does a good job.
But if we took out the zone structures, that would save you.
In the beginning, it would be rough because everything is customized to that structure. So
Right.
it'd have to go back and be changed
Changed that.
to that, but after that's done, it would be beautiful.
Okay, but then you might want to keep, like you said, like a sub book to really see what's going into each zone or not.
Well, if you're keeping the sub book, you haven't saved anything.
Yeah.
Well,
That's
no, you're
correct.
not, I know, that's the problem.
Yeah.
No,
But
it's
it's-
not to go.
I guess
It
that's
would have
to
to go.
Yeah.
And that's kind of my question is, I have to read my own footnote, go back and say, how long has the district been around? I mean, after 43 years and the district itself, after 43 years, doesn't look anything like it did 43
No.
years
What
ago.
they intended
It-
So,
and
43 years ago
the
doesn't
purpose
apply.
of that accounting was to justify the tax.
right, because
And
you had people that were like this, and then you had your collector streets, and I'm
Mhm.
sure I'm using the
Primaries,
terminology,
yeah,
primaries,
yeah,
like,
yeah.
that kind of connected them.
But now that
But-
that's frozen,
Yeah.
there's nothing to talk about. There's
There
no
really
need to justify, was it around
Maxing
3
it out.
or whatever.
Yeah.
And then there's legal questions too that I've
Right.
got, I haven't opened that one yet,
Right.
of having the law firm give us an opinion that this can be done legally.
Mhm.
But your pavement management system, when you implemented that, I think that to me was the key to getting you to a place where we're maintaining the roads appropriately and fairly.
Mhm. Yeah.
Yeah.
And kind of took a lot of
That was
the
important.
potential for political, I'm not sure what the word I'm looking for is there.
We're going through the budget process now and I came here, I started chopping it because they just kept doing, they had these budget workshops in April, a month ago. Like, what are we doing this for? Well, we've always done it that way, and I think back. Well, yeah, but the people up here, all right, have got every zone coming in and beating on them about raising their assessment or benefit fee or whatever they call it, which is another more tax. And so that process was probably overwhelming to us, particularly those five, their neighbors are beating on them, keep my tax low. Or I'm sure what could have happened is zone 3 could have come in and said, we want all of our streets rebuilt and we're willing to pay for it. I'm sure they never heard that, but the accounting was there
Was set up.
to do that. And so now that those days are over and the tax is what the tax is, there's nothing to account for. You don't have to give any demonstration.
No.
This or that.
No.
So, but I don't know, because every district is a little bit different, us being a road district. I know that we're gonna spend a little bit of legal money for them to research, to be able to say that this is compliant with Jarvis, this is
Right.
compliant with CAN, it's compliant with all these other, on the revenue side.
That,
You know,
I mean,
the
and that
tax
to me,
and
the
that.
oddity of it is that we're not talking about changing anything revenue wise.
Right, but.
You're still collecting the same money, it's just, I mean, and it doesn't even really drive when you spend the money. You know, you're collecting this assessment in zone 2. You may not do any work in zone 2 this year.
Right.
That's right.
And that happens frequently,
Yeah.
because you get
So-
every third year or
So
something.
what's the point, is that over time, everybody gets
Everybody, yes.
taken care of. And honestly, you probably would be better off potentially, because you might be able to take some of those funds and be able to, look at your reserves and say, okay, well, this is going to be reserved. It's not zone 5 money, it's not zone 2 money, it's district money. And it's a reserve, so we can invest that maybe a little longer term and get a
Sure.
better rate of return on it.
Sure.
You might be able to get out of some of it outlay and get into, camp or some of the other, county pool, some of the other investment vehicles that are available to you. Better
Yeah.
return.
Remember, we looked into that about 4 years
Yeah,
ago.
it
It's
was
about,
4 years.
yeah.
But you have to be able to, and again, it doesn't make a lot of sense if you're, using it as your operating account, you're taking money in and out. But if you-
Right.
But if you sit there and you go, okay, at a minimum, we should have 2 months' expenses in reserve. And that we should never touch.
Right.
So you ought to be able to take that money and invest
Invest
that pretty long term. And as I expect interest rates are going to be raising here. So, might be an interesting.
Okay, very good. Thank you very much.
All right.
Look forward
Thank you.
to,
So we're
you're gonna be on
zooming
Zoom
you tomorrow.
We're Zooming tomorrow.
Okay.
I
Wonderful.
appreciate that very much. I had this meeting today, I've got the meeting tomorrow, and I have to be in Valley Center on Thursday night. So.
But tomorrow, to be here at 6, you need to leave at 2
I'll go
o'clock.
back to it about 2:00. And even today, I think half the trip was at the stoplight down here at Date Street.
Oh.
I think I got there right when it changed, and so I had to run through the whole site.
That's right. It's a long time.
And my phone the whole time was saying, you're gonna get there at 2:29.
And that's what he
I'm
said.
like, I'm good. And as I'm sitting at the light, it changed, he goes.
Yeah, he was checking when he goes, okay, wait, it says I'll be there.
It's amazing how accurate that thing is.
That's amazing.
All right, well, thank you again
All
very
right,
much.
thank you very much, Mike.
Pleasure was mine.
Thanks for coming.
All right.
okay, well, let's get back to the
See you on Zoom.
See you tomorrow.
district budget.
You want a bottle of water, do you think, for the road?
I would love one,
Well,
honestly.
you got it.
Oh, thank you so much.
If I can address the budget issue.
Yes.
Just tying off.
I was
what we-
laughing.
Yes, right, I agree.
We've been kicking around. Reason I did is kind of-
See you later, bye.
Said, If we're gonna add more labor, rigor in finance here, okay? What we do it.
That's right.
And because it's kind of like the sheriff, they say you buy the whole car or no car,
Right.
okay?
Right.
Same thing with hire people, what are they gonna do? I think we agree that there's not full-time there. Now, there's something, this Renee that worked for us. or-
Yes, yes.
Well, in the back of my mind, she left, and so in limbo is this whole GIS thing. That GIS and those tablets that those guys have in the field, it's not gonna run itself. Now, it's running itself right now, but it's the same as, our internal computer system and stuff like that. It's gotta be maintained, upgraded, we should probably be seeing some management report, this and that, I'm not sure what.
Right.
So, okay, that we could add in because Renee was working on that, maybe 10
Okay.
hours a
She
week.
has some,
And as she was
experience.
working and I'm watching this brand new process,
Uh-huh.
it's global, satellite junk and
Right.
everything. Thinking, well, here's an addition of things we have to do, okay? And it all sounded great now, our nice little tablets, but you gotta maintain those.
That's
suckers,
right, you
okay? And somebody's gotta do that has the knowledge. That could be parallel with an accounting person, okay, in its detail. So we have that. Anyway, I told Teresa this morning, put in $35,000 under wages, just as a number. Okay, we're not gonna start this July 1. We could go with a part-time person.
all right.
We could go the whole enchilada, but someone to replace Teresa, even in their younger years, say, 2 or 3 years, is probably gonna be in the $60,000 range, plus the you're at $100,000 right there.
Sure. Sure.
So I think, so I don't know, I thought about it last night. Said, well, why don't we just throw like $3,000 a month for this current coming fiscal year and tell the board that's for this purpose. And if he introduces it tomorrow night, that's a good
Lead
segue
into it, sure.
And,
You sure that's enough?
I know, I would have put double that, but then you start skewing your big increase in the budget itself.
I see
And so
that.
the people, when they look at our
Yes, they
website
are.
or something, or might be saying, what are they doing down there? That's the only reason I didn't put something
okay.
more realistic. But that's why I'm bringing it up to you. You're the policy maker. That's just the way I viewed it.
Yeah, I think okay, that's fine. I think that's a good idea.
So,
And it gets it started without going
Too
the
much.
full
Right.
week.
well,
So what we want to do is make sure he goes first.
yes.
And he
And then-
will anyway.
He will, right.
Because of the way it's.
Set up.
Well, for someone, how long would it take for those systems to be maintained and kept updated? Is that a lot of work?
No, but it would be something you would add on, because if we just said,
You
let's
can't just
hire
say,
another
yes,
Teresa.
right. Well,
One of the
no.
two of them isn't gonna have enough to
So,
do.
so let's just say, is that an 8-hour-a-week job? To maintain, not yours, but to maintain,
Yeah,
He said 10. You said 10, yeah.
be about 10 hours?
I mean, right now it's getting 0 and we're functioning,
Right.
but at some
Yeah.
point, we need somebody and there's things we can do with it. Somebody needs to explore training and,
It does a lot.
It'll
Does-
take as
okay,
much
it
as you
does.
can. I'm
Yeah.
going down their big conferences in San Diego
Uh-huh.
in July or something. And I'm not a techno nerd kind of guy, But I told Teresa, I'm gonna go for at least a day on the governmental
Mhm.
thing and just sit in and try to understand that world, so.
Well, Teresa, what would you, I mean, if you needed someone to reconcile the bank statement
Well,
monthly,
I think,
is that a long process? Mine isn't.
no, I mean, we were talking, it's all in what we want
Someone to
out
help.
of that person.
Right,
We want them to do all the payables and receivables and let me do the, more complicated
Right.
things. So I'll have time to do those things
yes.
and work in the GIS, like he was like
Mhm.
working part-time over there. It's just a matter of how you want to attack it. And, we were talking, within 3 to 5 years, I'm gonna retire.
Mhm. So they
So-
need to get on, we need someone on board to learn now.
Exactly.
Absolutely, you
Exactly.
cannot
I would
retire
not
with a
wanna do
back.
that.
with
And
a
maybe
back.
that's the way we end up going,
I
is
think
just
that-
bite the bullet and
yeah.
say, let's get a middle range accountant,
Mhm.
but maybe not with her skill level yet. But, and then bring them in with the assumption that in 3 years or whatever,
Mhm.
that person is gonna be trained up and
Right.
can just,
Right,
And that might be a good hire. I mean, you can
Yes.
start out part-time right now, but you play your cards right,
and
she's on her way out. So if you
Yeah.
do the,
and
learn
they're,
everything.
they know everything, I mean, they're learning and they're
Exactly.
doing, they're very detail oriented,
Yeah.
like you have to be,
And we get the right person.
That's right.
We might have to. look for a
personality
couple.
wise, right, I
so
think
then
that's
there's
a good
that
idea.
other elephant in the room, which is a FEMA. Right, okay,
Mhm.
because I still remember, it was you and Mary Ann when the storm hit.
Right.
We were waiting for
Mhm.
Trump. He was fighting himself.
Right,
So it took 2 months to determine whether there was gonna even be federal money.
Right,
Right.
okay?
right,
And so during that period of time, everybody's, at the gate, ready to run,
Mhm.
hoping that he signs it. And I remember sitting down with Mary Ann and Robert and saying, how crazy do you want me to go on this? Because I've got the time that we can go find lots of damage. Okay. And that's what we did, because normally the president signs that thing like the day
That's
after,
right. They do.
whatever the disaster is.
You know,
But in this case, we had a couple of months and Keith's saying, well, this washed out a little bit here, and I'm saying, let's go for it. And so we basically took the time, inventoried everything they did out in the field. And we used some consultant or other paving companies and stuff, and they go look at it, write it up. But I would assume that we are gonna always do that. The timing might be a problem, but you can. So,
well, now with the new system you have, it might not be as hard.
Yeah, that's very
good
true.
point.
It shouldn't
Good
be
point.
that
It
big a
shouldn't
deal.
be.
That.
I mean, that's why we put it in place was.
So you're right, I forgot about
That's
that.
right. I mean, you didn't have that in place. That's why it took so long. That's why it was so hard to do.
the FEMA was.
No,
Oh,
no,
we didn't have what we call the tablets, so maybe.
Oh, okay,
Yeah.
that's right, that's
Yeah.
right, okay, well, that.
now that you have that in place.
So we have to assume there's always gonna be a FEMA coming or.
Every few
going.
years.
Now we're closing it down.
Every
Right.
3 to how many years? 6 years probably.
I think that's about the average of over the 40 years.
Right.
That
Yeah.
this district's about everything.
And this particular FEMA, at least in my experience and probably several years previous to that, I mean, we had a total of 60 damage sites. That's huge.
That is
Usually
huge.
you have between 10 and 20.
Yeah.
So this was like
Yeah,
all
but
over the
we
place.
wouldn't have known it in the past.
Yeah,
That's very true, huh?
that's true.
Well, that's the problem, but now you'll know it.
Yeah.
Okay, let's get on with I think the amount you put
Yes.
in there is fine. I think
it
it's
started.
low, but I think we can deal with that later on as we decide what we want to do. But I'm glad you have it in there. That makes a statement
This
that
will
we
get
need
us
to do
started.
something.
Absolutely.
The thing, looking at this, and again, I'm just looking at it, I know things are, the thing that I see that we didn't manage well this year, quote unquote, I don't mean that really in that sense, were legal fees.
Right.
And I think that's probably because of the FEMA thing.
And CalPERS.
And the investigations.
CalPERS is best.
Yes,
Agreed.
yes, that's correct, I forgot about that. But certainly that whole thing, the arbitration was a big expense.
Yeah.
And that would have made a big difference in the percentage over.
Yeah.
So you're putting in for next year for legal fees, 44,000.
The same as we had budgeted a year ago,
Right.
based on
42.
expecting a normal year.
Right.
Okay. I think the other thing that's up is the liability insurance.
And that's.
Right.
We knew that was coming,
Right.
yeah.
So
Across the
we paid
board.
for all those hurricanes.
Right.
It's both the liability and the property.
Right.
Yeah.
Both up. But that, you can see that
Yeah,
on the.
that's a lot.
Right.
That's right.
I think the rest of it is.
That's really
And-
within,
Except for wages, which are up substantially.
And well,
Because of the stuff, that if you take out that 35,000, would drop down to 7.9.
and that's the COLA this year, inflation,
Right.
crazy.
Or should we leave that, go back, because yeah, it's a good question, why the hell, because that's why I've been kind of worrying about that we're gonna present this. Maybe we just make a new line item that says future accounting or something and take it away from current wages. It looks like
that looks like that's
Teresa
what it
Jeff
is
just got this
right now.
massive raise.
right. It does. I think you should line item that. I
Yeah,
really
and
do.
just, or, you know how we did that where we have that little account for this building, since we own the building, if we have to do improvements? What do we call that? Future planning,
Yeah,
Okay.
we have long-term planning,
long-term planning.
yeah.
And what if we
So we
had,
put it in the admin or in the,
Yeah, man.
I put, yeah, I
reserve.
put it like that, you
like a
maybe,
reserve?
because that's what we're doing is,
Because we're not, we don't know when we're gonna use it.
right, because I can always take a resolution to a board meeting that makes the position, this will be called the assistant accounting
And
director.
here's the
or something,
money.
Here's the salary range,
That's right.
and then it becomes permanent.
Right. And we budgeted for, we had it in the budget, but
And then
when
we
that
transfer
happened,
it.
right,
Once
transfer
we
into
have
it.
future, like.
Yeah.
Robert, does that make sense?
Yeah, that's fine. I think that's a good idea.
I do
Okay,
too.
so Teresa.
See, the
come up
question
with-
the question would come up is where are you getting the money? I might be the one that asks you that. And then you'll say, oh, this is where we got it.
Well,
And that would
you
be
know what?
fine. You
Mhm.
see, I mean, I think that's,
Right.
Leads
exactly,
into it.
That's it.
exactly.
Right.
yes,
Absolutely.
like you did this year with something else that I asked.
Yeah, yes.
Yeah, that's right.
Yeah, yeah.
That's fine.
we still, we do have money in long-term planning,
How much?
40.
You see, where is that?
It's in the balance sheet,
Then
so we
what
don't
if we
see it.
have
It's a
Okay.
reserve.
Let's add 35, or let's add 36, that's $3,000 a month. Is one possibility for the time being, like, just one possibility is accounting jobs are pretty easy to fill, part-time,
Mhm.
primarily working mothers.
Mothers, that's right.
And they want to work, part-time.
Or
And
during
the
school
right working
hours.
Mother could say, I'd like to do that, because in 3 years, I can jump back into full-time workforce when Johnny goes off to school.
Absolutely.
So,
So
we
that
can,
would-
we can look at those different options, but if
That'll
you
give
had
us
3,000 a month,
75,000 in
there
there,
you go.
in our
That would be
reserve.
fine.
Yeah.
Now, the other question I have is you have accounting and auditing down.
There was, this was, the first year, couple of things. Part of the expense, there was a single audit for FEMA, part of it was in there.
Okay.
Okay.
That's the
We
main
won't have
reason.
that
All
next
right.
year.
We won't have to have that next year.
Right.
Unless they send us every single dollar on overruns for large projects and everything else, so we'll see.
I still want to know where the state squirrel,
Yeah, something's hinky.
someday I'm gonna find.
Okay, I think, yeah,
So the factor we used was the CPI that came out a week ago.
Right, right.
7.9,
The 11.
Okay.
And just spread that across, so.
So the
that-
previous month, it was 8.5, March, but April went down to 7.9.
I think it's important that before, that as you, when we present this,
Uh-huh.
okay? And you start with your comments, you make that statement in advance.
That's the seven.
As opposed to, because it'll come up, why are you doing all this 7.9%? That's a lot.
Yeah, unless if you don't know.
So
That's
that's
right.
correct. And so I think it's a good idea. I think the other thing is, if you look at the total, okay? You have, now this is the total at the bottom of total general administrative. You're up 10.3%.
This
Total
year.
this year, that's right. And next year, the percent change is going to be
4.8.
4.8.
Yeah,
Remember,
So
we're
I
gonna
think
take
that's
that
important
35 out of there though.
to show that as well, as you
Right.
mentioned.
That,
Oh,
that's
yeah.
down,
That's
that's
right.
down.
Because that goes, yeah.
And then it'll go up over here,
Mhm.
which
Okay.
is at 1.76 right now. So I'm gonna put the 35 over there.
That's good, huh?
Yeah, because that capital asset, that's just like pending money expenses.
Yes,
If we
yes.
use it, we use it, we don't, we
I
don't.
mean, we could do
So
whatever.
yeah,
we want.
that's really where it belongs, because it's gonna be a
So that's
year-long
gonna bring this
experiment.
down to probably 1.9 maybe,
Maybe,
something like that.
Yeah.
Very good.
that's good.
So generally, I make just, this item comes up, the general statement, like you said, we used as the inflation factor, 7.9.
Right.
And we've also added 35,000 because of the auditor's recommendation that we get extra help instead of every time we get a FEMA bearing our finance department. And then a few other little things. Then I'm gonna shut up and then have Teresa, and this is what they do
Briefly
here,
go over.
is go through the
The
line
highlights.
items.
Yeah.
I'm gonna hit
So
the
the board
highlights.
members can ask, you know,
Not
what's
gonna
this,
go
what's that?
account by account.
No.
And
It's
then-
self-explanatory.
Now, where does finance committee, you wanna be at the beginning? Or the end? Or you wanna be quiet?
You want anything?
Because you're co-conspirator here with the
Well,
budget.
I actually, it doesn't matter because I'm gonna turn it all over to you.
Yeah.
Okay.
I mean, that's really,
This
I don't
is
need
really-
to
No,
make comments. I think you should. I would, however, in your comments, point out the percentage increase at the bottom.
right. Just.
Not just that the 7.9%,
But that.
but that the
increase.
total,
So there's actually only about 4.
that's right,
Right.
or actually less.
Now,
than we do. No.
when I just wanna make sure it flows right.
Uh-huh,
Like when I start going, hitting the highlights like we usually do, you know, I usually say overall, then it ends up being 1 point, whatever it ends up,
Yeah.
or are you
Right.
gonna do that?
I'll do that in the summary, because I'm gonna do the summary.
Okay,
Here's the budget,
Mhm.
here's what we're up to. Inflation's super high. We use 7.9 because it's the latest CPI. Overall, though, when we had, I'm gonna have to say, we exceeded budget last year
Mhm.
in a couple of areas, and most of them are professional
Right.
areas that are legal.
yes, legal.
Because we had some legal matters that came up. And we had county because of the FEMA and some of the changes in the rules. Those are the primary big items.
Right.
And that we've tried to prepare a budget to present, which is 2.3% growth. We're not expecting the legal area and the accounting area that we're gonna repeat that this year. So we've brought those numbers back down.
Yeah.
And the
That's good.
overall percentage increase is 3.8%, whatever.
Whatever.
And this,
Sure.
Teresa has all the detail and will go through with you and just give you a little brief recap on each
Right.
each of the
Sounds good.
major categories.
Sounds perfect.
And then are you gonna lump like wages, payroll taxes, state taxes and all that kind of in one?
you mean, get them out,
It
you mean
went through.
separate all this? I mean, you want me to put them,
No,
mean,
I want
talking
you to-
about
I
it.
want you to, and you did that last time.
Yeah.
Yeah, you kind of take it in bands.
Yeah.
instead of-
yeah, I took just like, yeah. And so I just wanted to let you know, the written report
Yeah.
is there, but all these numbers that are in this written report are reflected in this, Here.
Right.
so, okay, the cover page.
Ooh.
So the main, I'm sorry, am I getting ahead of myself or ahead of the conversation? Anyway, the written report, you go to primary zone. Really the only,
Yes.
projects other than regular budget work and, regular budget work, we've got an emergency appropriation. The only thing we have going on in this budget is a $675,000 slurry seal. And it's broken up. We don't know how it's gonna break up between the zones. We just know the total dollar, so I just kind of spread it throughout the zones. But that could all
Oh, I
change.
see what you're doing,
Yeah.
okay.
And
A lot
you know,
of it is gonna be on the detour. That's 180,000, or about 200,000 to 700,000 is the detour around the washout.
Okay,
Because we
Yeah.
promised those
that has
folks,
to be done.
we've already
Yes.
patched the bad areas in the pavement. And now we'll go over the top with new slurry and striping.
Okay.
And the balance will be spread around, and Ron's working with our engineering on, which road segments.
Okay.
So that'll be coming to the board like in late summer.
Okay.
And one thing I said to them at the last meeting is in the back of my mind, with everything I see on the news every night,
Mhm.
it's making me pretty nervous, we're on fixed income as a district.
Oh, yeah.
So maybe we hold off on the slurry seal, but then when we talked about it, there was no answer.
No, there's no
They've got
right or wrong
time.
answer.
So, but one is, is the glass half empty or half full? Well, maybe now's the time to be buying all the oil you can get your hands on, because you'll wish you could pay this price,
Price,
a
yeah.
year from now.
That's,
So
could be.
they're, at their next meeting, they're gonna wrestle
yeah,
with
I
that.
think they need
But
to,
basically, the plan was to do a 700,000
yes.
rehab job
Yes.
this summer.
And I really think, if you're looking at just Avenida Del Oro, I mean, that really needs.
You did that.
Yeah,
You're on
that's a
there.
bad
It's
one.
not you, the
Yeah.
Del Oro.
Yeah.
And that's kind of the entrance to our community.
It is at the
So-
entrance, so it means a lot to and Sandia Creek too. Those certain roads are, but I've noticed Avenida Del Oro is
It's
pretty
the best.
rough right now.
Yeah.
So, and you know what, Paula, I apologize. This is the first time you're seeing this written report. And so I should have prefaced it with what it is, basically.
Well, I know what, I figured it out.
Yeah, it's all the work that's gonna happen by
Right,
zone.
this is
Yeah.
the engineering committee's recommendation for
Yeah.
this coming year, right?
And that, it's, going back 100 years.
Yeah, we're required to do that.
But, in order to, okay, if you do a tax, you
Mm-hmm.
have to have an ordinance, like you're passing a law. That's the sheriff tax, that's the way
Right.
it was done. This was a benefit assessment.
Right,
And the law says if you're gonna do a benefit assessment, you have to give a written report,
Mm-hmm.
so that's kind of a term of art, right? To the taxpayers before you levy that assessment.
right,
So
right,
he knows what he's getting on his property
Sure,
tax bill.
sure,
Now, he can go through the ordinance process and do hearings and all that stuff. They're assuming he knows what that tax is, but this is to protect the taxpayers.
That's correct.
He
Okay.
gets some
right, okay,
definition of what your tax is.
which are, sure.
Okay, and you're not calling it a tax,
Right.
That's.
It's an assessment, that's right, it is an
It's not a
assessment.
tax.
But it's amazing how many people don't know that there's an assessment on their property tax bill.
Until they see the
Until-
bill, and then they call the CSD and say.
Yeah, and I have to explain what everything is, and then they understand, but.
Right.
Yeah, they usually call kind of upset. What are you charging? What is this?
Yeah,
And
well,
I'm going, well, yeah.
The other thing, just as an aside, where this is not necessarily related, but what happens with realtors who aren't too familiar with the area?
Mhm.
They tell you your taxes are about
Right.
the percentage, whatever.
1.3 or
yeah,
whatever.
yes,
And then it turns out to be substantially more. And,
very true.
and then you get the bill and you call the realtor and say, what happened here? Why'd you tell me that? They'll say, oh, I didn't know. And they maybe didn't. Or maybe they did, who knows what they,
Though-
but in any case, that's something that people should be aware of. in advance.
Absolutely.
The one thing I just want to make sure before we end this is we set the date for the
Oh,
RFP
yes.
people. I have to
We
start
have-
contacting.
Did you give them the bids, the proposal packets
No,
yet?
I haven't seen that.
Oh, I
We'll
did.
get-
No.
Yeah, I thought, because
I
I have a, I haven't read mine.
Tell you, well, shoot.
Well, just give it to them tomorrow night.
Oh, yes,
That's
I'll
fine.
do it. I'll
We
see
need
there's
to-
3 of them.
Date for
Okay,
the interviews.
okay.
Yeah.
Yeah, and then we need to set dates for the
For
interview.
them to come in
How about
and give their
Wednesday,
spiel.
the eighth?
Yeah, and we were, what, the
That'd be a
8th,
week before the board
May
meeting.
8th, if you guys are open.
June 8th.
June 8th, I'm sorry.
June eighth, yeah. I mean, that worked for.
Right at this time, I'm
I'll
trying to
let you know
think,
tomorrow.
I have to
Just
just
need to call them
check.
tomorrow and set up appointments.
Well, or whenever they
Yeah.
decide.
Yeah.
So take a
Okay,
look at.
I'm gonna look at,
We're gonna need 4 hours of your time.
that's fine.
And then with the way the calendar falls,
Oh, yeah.
your meeting the third Tuesday is a week behind the board meeting. So the
I
party
noticed
will
that.
have been over. So why don't we call your interview time, the finance for June?
Okay.
Sure.
And then if we have any items we need, you could do it before or after the interview. That work?
That's fine.
So
So
would
you
we,
guys
would
just
be,
give us-
be officially canceling finance?
The one on the third Tuesday.
21st.
Yes.
Yeah, so
And
that
then
one, but we'll still be meeting.
For the interviews, we
RFP.
still have to post a special meeting for them.
Right.
And then we can put other matters
If
that
there are
arise.
any.
Okay,
Yeah.
so we're looking at June 8th to do that.
Or if I'm just
Well,
tossing. it out.
no, I will look at my
Interviews
calendar.
Open to the public,
Could be, yeah.
is that right? Okay.
I don't see a problem, but I better double check before I open my mouth.
Yeah, I have to look at
No,
that.
well, I just looked at my calendar and said, well, it's midweek.
Yeah, yeah.
We're hoping that you make a decision at the end of the day that day.
Mhm.
And then we can prepare it, put it on the agenda for
For the meeting.
presentation to the board. So the way I kind of see this is the 3 companies are gonna come meet with you.
Mhm.
You're gonna make a recommendation to the board on the 15th. week
Okay.
later.
Right,
And we want company ABC, and we'll have ABC there,
good, okay.
but not the others. And then if you get one more vote, they're our auditor.
Okay.
Yeah. One.
I don't see a
one is-
problem, but I'll just double check it.
One is Leaf and Cole in San Diego. There's another firm in Rancho Cucamonga, one right here in Myriad.
Really?
Yeah.
Okay.
And I haven't read their stuff, I was just looking at it.
Yeah, it's a lot of-
They're all qualified.
Okay,
They're all closely in range
Yeah.
too.
And their price is $3,000 apart.
that's good, that's good.
And they're all going in the good direction, they're all less than we're paying right now.
That's good.
So even Leaf and Cole came in less.
Interesting.
I guess they-
They gave us a big discount.
Really?
So you'll see all that.
Yeah, and I'll let you know tomorrow about June 8th. I don't see a problem with it myself. I know in June, we're going back to see our daughter for about 5 days, but yeah.
Okay, just to finalize, we have the investment policy and we see that our interest has gone up a little bit.
Yes.
It's climbing, it's almost 0.5%.
Oh my.
It will be dizzyingly high soon, might even reach 1%,
Right.
but the daily was 0.42%.
Yeah.
So we'll see where it goes. And if there's no other items.
No.
We can adjourn the meeting. Thank you very much.
Thank you,
Thank you, guys.
thank you.
Good.
So